Hey guys, what's up? In this video, I want to talk about triangles. In this series of videos, we have started to uh, teach you and talk about basics, and uh, here, as we go on, it gets more and more professional, and you have to practice more. And you might heard all of these patterns and concepts, but I assure you that in each video you can learn a lot of stuff, and you might never heard of, or I try to make it simple. Some of these concepts are not simple, but I do my best to avoid complexity and make it more understandable. So let's start. In this video, I want to talk about triangles, all kinds of triangles, and I don't want to bore you. I just want to get to business and get to the point. Okay, let's open a chart. For example, this one, USD CHF, totally random. And first of all, I have to say we have a lot of many kinds of triangles, but generally, when you see two lines in an opposite direction, they approach to each other, we call it a triangle. If you look at it mathematically and in geometry, we all studied at university, at college, at high school, at the school, whatever. We all know what triangle is. We have, for example, this kind of triangle, which we call it symmetrical. There is a symmetry between this line and this. Other kind of triangle is something like this. You have a horizontal line at as a resistance. You can call it a resistance, whatever, as an upper line, and this bullish line at the bottom. Other kind of triangle is the opposite of this, which is we have horizontal line at the bottom and bearish trend line at the top. We also have some other triangles like this one. We call it expanding triangle. They're not prevail, and you don't see them a lot, but once in a while you see them too. It's the opposite of this one. In this, you see the price getting smaller and smaller, but this one it's expanding actually. And in both of them, in all of them, if you wanna determine a target for your position, you can measure this height of this, or width. This height of this triangle, and estimate your target. This one, you measure this, and you put it above or below. Breakout in this two triangles, which they are both symmetrical. The chance of breakout from each side are equal, but this to this one, because we have a bearish line, the chance of bear breakout is more than bull breakout. But in this triangle, this we call this descending. It's like a plane. It's landing and descending, and this one is ascending like a plane. Wanna taking off. It's ascending, and the chance of breakout is in favor of bulls. We have some other kinds of triangle, like wedges. I talked about wedges in previous videos, and the difference between wedges and triangles is first of all, you have two lines, but these two lines are in the same direction. But in triangle, we have two lines in opposite direction. But this wedge is you have lines in the same direction. Both of these lines are heading up. But this bottom wedge bottom, both of these lines are are heading down. And about breakout, in which top we expect to see a bear breakout, because we see it at resistance mainly, but it's also used as they also consider it as a wedge flag, you know. As the wedge flag, it's a resumption pattern, because you have a bearish pattern and a bullish pullback as a wedge, and you expect to see a bearish breakout. But and as in a bull trend, you see a bullish trend and bearish breakout, bearish pullback, and then you expect to see a bull breakout and trend resumes. But if you see it at resistance, you expect to see this wedge top, as you can conclude of its name, and you expect to see a trend reversal. So these patterns depending on where you see them, they have different functions. If you see them at support resistance levels, they work as a reversal pattern. But if you see them at the middle of a trend, you expect to see a reversal pattern. They work as a reversal pattern. I'm sorry, resumption pattern. This one, and breakout in a opposite direction. This one, and breakout, bull breakout. Okay, now let's put theories aside and start practice in real world. I already draw some of these triangles. As you can see, we have a symmetrical triangle, and the longer it takes and the more legs we got, and the the longer it takes regarding the time it takes to form and the time it takes to see to form a breakout, we say okay, the chance is equal and getting equal. But if it's a small in a in a trend, we expect to see a breakout in a in trend direction. But in this triangles like this, which we also can call it a we can consider it as a trading range too, something like this. The chance of breakout from any direction is 50%. You have 50% chance of bull breakout and 50% chance of bear breakout. Okay, which it happened in bull breakouts. So I can also put it this way: whenever you can put price in a between two lines, you can consider it as a triangle. Here we also have a triangle and a bearish trend and a bullish trend, and we have this bullish bull breakout. This one is a ascending triangle. I have to add something. The important thing for drawing this triangle patterns and to find out these triangle patterns, we need 3 pushes up and 3 pushes down. It's necessary. For example, here we have first, second, third, fourth pushes, so we can draw a triangle. And as I said before, as I mentioned before, when you see ascending triangle, it's more possible, there's more chance for a bull breakout. You can also see a bear breakout, but there is a 75% chance of bear breakout. Sorry, there's a 50% chance of bull breakout if it's a ascending triangle. And this one is more little wedge. We have first, second, and third pushes. It's more like a wedge. This here we had this descending triangle. We have a horizontal line and this bear trend at top, and we expect to see breakout. It's more likely that we see a breakout as a bear breakout. Let's find other examples. Here we have this wedge. There is a point about wedges, which is when you have a wedge top, you expect to see a bear breakout, but here, as you can see, you had this bull breakout, but and short time trading range, but after all it happened, this bear breakout happened. And if you draw and consider measured moves, your second target, your second leg would be somewhere around here. For considering measured moves, first you have to consider the first leg, which could be here, and you measure this first leg and you copy paste it and put it at this level, and as you can see, you expect this price is where you expect to see a reversal, because it hits your second target, second leg. So after the second leg, you expect to see some correction or pullback, because the reason for that is bulls who bought at this price, they take profit and they get out of their position and they execute their positions, and when they take profit, that's simple. When you take some profit, you become more cautious and you don't want to lose that money. That makes sense. So you have a wedge top and a measured move target, and you can also consider climaxes, which I don't want to discuss about it now. We will talk about it in next videos. I'm trying to find the expanding triangle. Okay, here is a gold chart in 1 hour time frame. If you look at this chart, you can see wedges are, you can see legs are expanding. Let me erase all of this shit and make it more clear. If you draw a line, you both have you know, these lines in separate directions, but as I said, you need 3 pushes. We don't have that 3 pushes now at these lines. Maybe it's not a good example. Let me find another example for you. Okay, here is another example on expanding triangles. As you can see, you have this expanding legs, and each leg is you can subdivide each leg into 2 legs, first leg, second leg, and all of it as a one leg. And but it's kind of a triangle too, you know. You can look at it in different aspects and perspective. Okay, another example here. This pattern is rare, and you have to look for it. This last leg before breakout, you can consider it as a target, and as you can see, if you copy paste it, you see this target, and at this point, traders, those who sell it short, and here they those who enter the position at after this breakout, now they take profit and they close their positions, and as you can see, the selling pressure reduced, and bullish leg formed after that. And here, just next to this, after that, just right after that, we see a symmetrical, or this kind of this regular triangle And if I want to consider and measure and have a target for this, I would say, okay, yeah, it definitely hit your target. If you want to have a position here, yeah, it definitely did. You measure this height and you put it after breakout point, and yeah, here we go. Okay, I hope you enjoyed this video. If you have any suggestion, just put it in comment section, and have a nice day.